With a construction loan, the basic requirements are things like plans, budget, drawings, what is the property, what is the value of the property, when is somebody going to start to build. Also, we need to know some of the requirements about income and net worth. Who's the builder and when's it going to start, things like that we need to know. So the more paperwork you have ready, the quicker it's going to be. So the types of things, first of all, we could finance the land acquisition as part of a construction mortgage. You either do a partial advance, or sometimes we'll just do a straight up advance and then do the construction down the road as two different things. And then we start doing the draws. We do maybe give some money for development, while you're getting the permits and things approved. We'll do a draw, somewhere around maybe either the subfloor or maybe sometime around the roof and window stage. Once you have the roof on, windows in, doors in, that's usually a popular time when we do a first draw. Second would be when you're around the drywall stage. So if you have the drywall in, of course that means you probably have all the plumbing, heating, and wiring all done. You have the insulation in, and now you're at the drywall stage. So that's usually the second main draw. And there's usually a third draw somewhere between drywall and completion, as close to completion as possible most of the time. But sometimes if it's a larger project, you need another draw in between that. Maybe, when you have all the floors in and you're just getting ready to put the kitchen in. There are major benefits to using private lending for construction financing. One would be, you can get a fast approval. A private lender would look at it and quickly tell you whether, they're prepared to give and how much they would give and what the costs are, as opposed to going to an institution and going through an application process. And the second thing is the predictability. Private lenders usually spell out the draws. When you get to a certain point, this is what we're going to give you, and this is the dollar amount what we're going to give you. Whereas institutionally, most of the time, they will send somebody out and they will do an idea of what the percentage is complete. They have a mathematical formula how it works out. And when you're doing that, quite often you find that you're as far along in the project as you can get, and you need some funding, but yet the bank doesn't give you value for what is done so far, or how they evaluate is not what you need, and therefore they're coming up with it. Either they can't give you any money at that time, or they give you a much smaller amount than you need. So, predictability is good when you're building. You need to be able to count on those draws. Generally, a private lender doing construction financing does not need to take out mortgage commitment before he'll do the loan. That's a benefit to you because you don't have to, negotiate now for rates and terms. You can wait until you're done the project, and that'll give you more time. And also, if you have the house completed, it's a better time to be looking for a mortgage. An appraiser is going to go there and likely give you a better value when he can see what's done. Well, we get a commitment in place. We get a commitment probably in 2 or 3 days for a construction loan. But keep in mind, it comes again down to, you need paperwork together. We need a budget. We need an appraisal done. Is there a copy of a contract? So we can get the commitment together, so at least you know what the rates and terms are. But there is work to do, and I mean, you may have it already, which is great. But also, if you don't have it, we need it. So that'll be part of the commitment, though. You'll see it in the conditions, and it's just normal. For any construction loan, you need those things. If you need more information, give me a call or send me an email. Take care.